Good night, folks. We are Wednesday, 12th of February. So, unfortunately, like some of you have been, well, not too much, but I've been losing some money on LITM. Why? The reply is pretty simple. Nobody, include me, expect that the company will do 3 offering in 1 month in order to raise $35 million that they have now in cash. That's good for the company. It's bad for the stock in the sense that now they have all the money they need to explore all the mining sector that they have in Canada, uranium, lithium, uranium in Namibia. So they have all the cash they need. So the future is pretty bright, especially if uranium price, stay above $70. But in the short term, it's not good for the stock because naturally the short have been able to cover with the new shares. So there is not a lot of pressure. Pressure will eventually come back with the result of the phase 1 drilling in Namibia. But now it's a 92 million share float company, 92 million. It's not the same of 26. But the company is stronger. So, it's a long debate. A company need money. That's why they come in the stock market. So if they have the interest from some institution to make 3 offering in 1 month for a total of $35 million, naturally they will take advantage of the situation. But let's be clear, like I was writing, and I will repeat it because I stand with my position. If Namibia is a world-class deposit, even without taking in consideration what they have in Canada, uranium and lithium, you have at the end of the road, you have a company will be, the value of this company will be around $1 billion. So with the actual float, that's mean $10. Naturally, the float will move, especially if they need to raise money to build a mine. That's the cost in Namibia, average, is $300+ million. That's mean that if the stock go to $3 to $4, they may sell 100 million shares, and with that money, they will build a mine. That will give a new float of roughly 200 million. But if the company is evaluated at $1 billion plus, that's mean $5 per share. So, the story is great for the long term. In the short term, all these new shares is not good. It's not good because the short have been able to cover, like I was saying. Now you have a lot of retail going in and out. You have some institution who do some strange things, like CVS. They buy, they sell the day after. You don't really know what's going on. Then you have Frank from the company who don't release the lab expertise on the result of the drillings. He say that they may be released at the end of the first quarter. So that will mean end of March or before. All that, is weakening the company. That's why now we are at 0.6. So naturally, I've been selling at the top, then reloading lower, then resell, reload, resell, reload. So I've been losing some money. and I cannot take the risk that they bring this down to close the gap at 145. I think there is a gap over there. I prefer to go on the sideline and, buy the stock when something clear happen. Unfortunately, when there will be news, if it's in the pre-market, this is going to open at $1+. So, it's risky. It's risky. That's not the first time that I will not be in a stock that raise like GRRR. I was looking at this stock at $3.5. Now we are cruising at 23. And because we have been waiting 2 months, September, October 2024, I was not in the stock anymore. That's the sad part of the story. I really think that if you wait, you will have some huge return on LITM. But this company need money. If they can take advantage of the market and raise some funds, they will do it. And eventually, the stock will go back in where she deserved to be. Maybe in April, March, June, I don't know. Anyway, tonight I want to come with another story. I will not go into details because I'm not a doctor, I'm not a scientist, so I cannot, be super clear. It's TSHR. Tsha gene therapies. So why do I like this stock? You have quite a lot of shorts, so that's always good because if some good news hit the wires, they will cover at least a part of the shorts. And very strange, if you go and look, if you do your DD, 95% of the float is in the hands of insiders or institution. Talking about institution, Morgan Stanley and Octagon Capital have doubled their position at the end of 2024. Why? So you need to be a little bit concentrated to understand. There is very few companies who are making some research and human test on a disease called, I'm going to read because I'm not a scientist, so I don't want to say things that are not right. Basically, it's the RET disease, RETT. You can go on a intelligence artificial to ask. They will explain. It's pretty interesting. It's a huge disease that touch one girl on 10,000 newborn, and basically the only competition that this company used to have was NGNE. NGNE back in November, 11 of November 2024, have some bad news in the test. There was some bad reaction from the patients. And at the same moment, a lot of money have been coming in this company because they have a lot more success in the test, and as the other one fail, that's mean that they have quite no competition. They are all alone on this disease. I urge you to do some DD for the detail. You can go on several websites. You will have a lot of information. basically a lot of institutions have some shares and they are increasing their position. A lot of insiders have shares. They have cash. That's always good because, as you know, Biotech burn a lot of cash. They have cash until mid to end of 2026, and they have filed in December an authorization to sell from time to time when the market is good, when the price is high, for $300 million of shares. So that doesn't mean naturally that they are going to drop millions of shares at $1. That means that when you have a spike, they may, sell from time to time, 1 million here, 1 million there, and that's mean that they will have, they will have all the cash they need to go until commercialization. Especially that they have some kind of authorization of the FDA to have an accelerate approbation because it's a rare disease, and the markets really need what they are working on. Average analysts, nine analysts, have an average target of $6.5 per share. The lowest is 5 and the high is 8, so the average is 6.56. Now we are at 1.6, I think, so it's a 4 or 5 bagger. And I think they are going to make it. They are going to make it because they have the cash and they have no competition, and they have been doing tests on 2 tests, one with low composition and one with high. And in the 2 tests, patients were okay, no side effect. The actual treatment for that disease, there is one with approved since 2023. It's less effective and there is a lot of side effect, like diarrhea and all these kind of things. So they will be all alone with the product they are working on, and now all depend the news. Biotech is a dangerous sector because sometimes you have some terrible setback. But until now, everything fine, and the price is very, very low. You are paying for the cash they have in their hands. You are not paying for any prospect in the future. Another thing that I've been notice on this company since the end of January, so for the last 2 weeks, shorts have been very, very active to bring the stock down. They were already very active from the 30 of November until end of December. So this month of December, they have been very active to bring the price from $3 to 1.5. So I suspect that when they see that we have some kind of bottom, and actually the charts look like the bottom is in, they're going to cover a part of the short because they have been doubling their money because they are shorting since $3 end of November, I think. And now we are at 1.5, so they have doubled their money, and I think they are going to cover, especially because we have between now and June several news coming, who are very important, and they may anticipate, by basically selling puts, selling shorts, and buying shares. So, I know biotech is dangerous. I like the chart. I like the short position. I like the sector, the fact that they are alone. I like the chart. I like the price. I really think that unless we have some big setback, they are in a good position. The market cap is very near the other one, NGEN, but the difference is that they have a better product with less side effect. So there is no reason that these two companies have the same market cap. Basically, the other one was overhyped back in November, and the price was, falling down when they fail. And Tsha was more in the shadow, but the fact that the big one failed made that they are all alone on this disease with a drug that have very low side effect. So the story is interesting. The disease is pretty hard. You have a lot of it's big handicap, and I didn't know that's one girl, because it's a majority of girl. One girl on 10,000 birth. That's a lot. I never hear that. It's like 20 baby per day in the world have that disease. A vast majority are girl. So I think they have a shot. Naturally, to cure that disease is pretty expensive. So, when you don't overpay a company, you are taking less risk. It's like Litm. If you can buy the stock at 40, 50, 60 cents, it's better than buy at $1.5 or $2 for the same story. So the timing in trading is so important. Sometime I remember so many stories, but I remember back mid 2024, everybody, and I repeat, everybody was screaming, VKTX is cheap. They have the best product. They are going to be buy out at $120. You need to buy at $60. Everybody jumping, everybody, all the analysts, everybody was saying go, go, go. And now we are $29. So, stock markets, you never know. There is exterior factor who have some influence. The presidency of Trump, the policy, Medicare, this and that, a lot of things going on. So my advice is, don't listen too much to people, include me. Do your DD. Do your DD. Read article in Seeking Alpha. Article from analysts, very interesting. You have different approach. But I repeat, in the case of VKTX, Viking Therapeutics, I think, everybody at $60 was saying, buy. This is going to be buyout at $120. And now we're at 29. So, and there is a lot of other example back in time. Tesla, don't touch, or overhype, too expensive, this and that. I remember in 2015, 2016, 2017, a lot of shorts, a lot of people shorting Tesla. And then, you know what happened. Actually, everybody say you need to buy AMD because they are going to catch up with NVIDIA. AMD. I'm hearing that since the stock was at $140. Tonight we are at $110. So be careful, because Sometimes, yeah, a company is great, prospects are great, but the timing is bad. That's a problem. And it's very, very difficult, because if it was easy, we'll all be millionaire. The timing is difficult. I think that LITM have a great portfolio of mine in the uranium and lithium sector, but they need to prove, they need to show, they need to raise funds, and that's a bumpy road. That's a problem. And when we talk about value stock, so many stock was inexpensive, and they are still inexpensive, and nobody buy them. And they don't rise. At the reverse, look at Palantir. I remember 2 or 3 years ago, stock was at 10, 20 bucks. Yeah, overbought, too expensive. They have only $100 million in sales. Look at now. 120, I think, 115, $115. It's very, very difficult to know why a stock raise and why another one don't move. Market maker choose, institution choose. Some stock are target of short seller. It's very, very difficult. So what can we do else than make some DD, look at the chart, look at the volume, and, for example, Tsha, back in November, when there was bad news from the competition, they have several days with 10 million in volume, 25 million, 10 million, 2 times 9 million. There was a huge accumulation back in November that bring the price from $1.8 to $3 with a lot of volume. And then after that, December, tax loss selling, shorts, this and that, they bring the price down. I think it's an opportunity, but never know. You never know. So I repeat, do your DD, do your DD. That's the most important thing, because everybody can give you nice stories. And not especially to mislead you, because people may believe. I remember VKTX, people were saying it's the best drugs for obesity, it's a huge market. That's the one with the less side effect, this and that. Yes, but stock didn't rise. At the reverse, go down 50%. So, and I have story on the other side. I don't remember the code. Twilio. I think it's TWLO. I'm not sure. Twilio. At a certain point, it was at $60. Yeah, it's dead. No growth. They miss this and that. Bad. Don't buy. Don't touch. Now we are at 130. One good quarter and everything's in order. Another one. EPPS. APPS. I repeat. APPS. Digital turbine. 1 month ago. 1 month ago. I swear. This is dead money. No growth. This company going bankruptcy. And the stock, I think, have been going from $3 to 1.8, something like that. Tonight we are at $6 because they have taken good decision, a good quarter, good earnings. Bam, everything turn around. And you can check back 1 or 2 months ago. Everybody was spitting on digital turbine. APPS. Everybody. Nobody wanted. Now, explosion. So, you never know. You never know. All depend. News, dilution, the director, the market maker, the retail, shorts. For example, cloth. I was saying that for the last 4 months, I think. People was angry. I say cloth have been going to 4.8 quickly because the short have been covering millions of shares. Since they don't cover anymore, cloth is turning around 4.5, $4, 4.5, 4.3, 4.2, because there is no more the short to fuel to participate and buy shares. So now you need to digest all that, and you may have cloth under $5 until mid-2025. Not because it's a bad company, not because it's not going to $30 per share in 2028, 29, but because it was too high too quick. That's the stock market. You don't buy good company, you don't buy big names, you don't buy what the analysts tell you to buy, you buy what you see at a good price. I know a lot of people who, when cloth was under $1, who say this thing is not going in bankruptcy. I'm doing DCA. I'm buying from time to time at $1, at 90 cents, at 80 cents, at 70 cents. And now they are $4.5. They are very happy. If you buy during the Kool-Aid period with the short covering, you are stuck in the mud because you have been paying too much money. And same thing with Oscar or SCR. At $20, a lot of crazy earnings projection, and then now we are $13, $14 from 25. Too high, too quick. Too high, too quick. So it's painful to do DCA on any stock. If you need to buy now LITM at 60 cents, maybe 50 cents, maybe 40 cents, then 70 cents, 80 cents, it's painful. But that's the only way to have huge return, is buy low. But when a stock is low, there is a reason. So, all depend. All depend. Okay, I give you some link in the commentary section. I hope you're fine. Excuse me for LITM. I didn't expect this last offering of 16 million shares. I didn't expect that the news of the drillings will be postponed from the end of January to maybe end of March. So naturally the price have been hit, but I think it will come back. So let's see. Thank you. Take care.